Hello folks, welcome back to Stellicum Investments. My name is Magnus Brandforce. I am an independent investment advisor with Commonwealth Financial. I have been a licensed representative since 1992. Today I want to talk about a very important subject, and that is estate planning. And in this portion of estate planning I want to talk about something called transfer on death, otherwise known also as paid on death. This is an important process of estate planning, and later on in the video I will do a sample on one of the forms that we have here at Commonwealth on how to execute a properly done transfer on death for a brokerage account. The thing that is most attractive about transfer on death or paid on death is that it is a probate-free transfer of assets. It's done very quickly. If you are a beneficiary and the grantor has died, you are simply going in with a death certificate and your ID. And you are filling out forms, and that's it. The asset becomes yours, or partially yours if there were multiple beneficiaries. There is also something called a transfer on death deed. That is for real property and includes real estate. It can include vehicles. It varies state by state, and here in the state of Washington they didn't adopt that until 2014. And I would generally suggest, as part of an estate planning process, that you might want to talk to an attorney for more details regarding real property, but also perhaps also consult with a real estate professional and discuss any of the unique elements of the transfer on death deed for your state. I did read, and I'm not sure how common this is, that one issue is a title company may be reluctant to release the asset during the 3-year contestable period. I have my doubts about that, but my expertise is not in real property, it's in liquid assets, so we'll continue from there. So what transfer on death covers is going to be investment and bank accounts. And of course, that's what most people's liquid net worth is, involved in these days. Insurance contracts, whether it be life insurance or annuities, they already have required beneficiary elements to them. And an IRA also has designated beneficiaries as part of their structure. So we're talking about accounts that are generally in joint tenants with rights of survivorship, or individual accounts of, say, a single person or a widow or a widower, okay? The designation of who your beneficiaries are of course done before your death. It pays after the last owner's death. For example, a married couple, husband and wife, with a joint tenants with rights of survivorship designation, if the husband dies, the surviving spouse, the wife, becomes the sole heir. If they had beneficiary designations, they are not paid until all owners have died. Now, if both husband and wife were to die in a car accident simultaneously, in that case, the beneficiaries are paid. Paid on death and transfer on death is obviously very crucial in a single owner account system because once they die, if there are no beneficiaries on it, it is required to go through probate. Probate is going to require a process that results in what's called letters of testamentary. So in a probatable asset, a bank or a brokerage firm is going to ask for not just the death certificate, but the byproduct of the probate process, the letters of testamentary. And that could go on for a while. It could be contested. So by naming transfer on death beneficiaries, you save potentially an enormous hassle and certainly a large amount of time. The estate may be probatable anyway. You may very well have to go through that anyway. But for many people, most of my clients for that matter, other than their house, most of their assets are in liquid form, in stocks, bonds, mutual funds, and IRAs, and insurance, and bank accounts. So a person can greatly relieve the stress and difficulties of disposing of your estate by properly naming beneficiaries. It's not that hard either. Naming beneficiaries, whether it's life insurance, annuities, IRA accounts, TOD, etc., or in a revocable living trust, the beneficiary designations are revocable. You simply go back to an institution and ask for a new form and update your beneficiary information. If you have a good relationship with a financial advisor, this person should be doing this every time you visit with each other. In my case, I generally visit with clients 2 to 4 times a year. So, hey, have there been any changes? Having a relationship with a client means you know what's going on with their family situation and who the heirs are and the dynamics of all those things. So it's rest assured, if you change your mind or need to change something, the beneficiary designations are revocable. Another great element about transfer on death beneficiaries is it's free. Every financial institution does this as a service, and it does not charge for it. Now, being that it's free and it's not a moneymaker, you may notice that of all these financial institutions you've been dealing with for all these years have never brought up what we're talking about today. But an incredibly valuable service, for the clientele of a financial institution. It adds value. It's great for everybody. It's great for the heirs, it's great for the owner, it's great for the financial institutions. It also is good for the probate system. I'm sure there's probate judges that are glad that they don't have to decipher through this portion, among other things. Now, here's something that would have been really helpful to have been known by many people before the 2008-2009 financial contraction that saw a lot of bank failures and fear of bank failures, was that by naming TOD beneficiaries on bank accounts, you expand FDIC coverage. Currently, FDIC coverage is $250,000 per account. But if that account has beneficiaries on it, each beneficiary, up to 5, is covered. So you could have up to $1.25 million FDIC insured by having beneficiaries through TOD. I do believe it also covers living trust accounts that have beneficiaries in them. You can name not just individual people as the beneficiary of transfer on death. You can also name charities, and you can also name trusts. When assets are to be turned over to the beneficiaries of a TOD, the assets are received in kind. So if your account, for example, was simply 1,000 shares of Microsoft and you had 2 beneficiaries, each beneficiaries, if it was named equally, are going to receive 500 shares of Microsoft. The taxable basis of that may have been $50 a share, and today it's $200. But at death, the basis steps up or down to the valuation of the date of death. So the $50 asset is now a $200 asset by 500 shares for the recipient of it. If they keep it for 3 more years and sell it at $300, well, there was a $100 gain per share. If the asset were to go from $200 to $150, there would be a $50 per share loss on those assets. So again, TOD is going to cover brokerage firms, banks, insurance contracts like annuities and life insurance are already covered with their beneficiary system, and so are IRAs. Another thing about transfer on death is it supersedes a will. It is a contract between you and the financial institution. Your will could say something opposite of the TOD designation, but the TOD is going to override that. Unfortunately, though, if you have conflicting information in your will, it may lead to contestability. A TOD process is contestable, from what I've read, up to 3 years. I have only seen one instance of that in my entire career, which has spanned nearly 30 years. So generally speaking, it would be a good idea to not have conflicting information in a will. It may lead to a contestability issue if it's different. My personal experiences with transfer and death are that once properly explained to my clients, every single one of them wants it. The only client that I can think of now of mine that doesn't have it is somebody that has an extremely large net worth with very elaborate estate planning needs, and they have specific attorneys and accountants dealing with that, and they want it to go through the probate process. Or they've created trusts, and the accounts are designated as trusts. I do suggest that, again, a person's estate plan, including beneficiaries, should be updated at a minimum every 2 years. So part 2 of this now, let's go over the actual form. All right, so here I have, just as an example, the Commonwealth Financial Network form for transfer on death, supplemental transfer on death registration and beneficiary designation form. So the form is asking for the specific account number, the owner's name, social security number, date of birth, joint account owner if any, and their social security number, date of birth as well. This form is asking whether this is the original beneficiary designation or if this is an update. Page 2. We're putting the date that this becomes effective, and we are starting off here with the primary beneficiaries. This is who will be paid after the last owner dies. You are able to name either a person or a trust, or you can also name a charity. The percentage that you want of the account to go to that entity or person, their tax ID or social security number, and their birth date or the date of the trust. Below, you can see that they ask for some sort of an idea of, the relationship. At the end here, you see per stirpes. What this is essentially indicating is if you've named a person, and at the time of payout, this person is dead, by clicking that box, you are asking for that person's estate to be paid. An example might be a person has a son and a daughter, and they name each of the beneficiaries 50-50, and they check per stirpes, and before the death of the owner of this account, it turns out the son died, but they didn't have time to change the beneficiary designation. So at the death, with the son being dead, the son's estate will be paid. And that is interpreted by a process of probate. And that becomes a more complicated subject. Again, issues can certainly be resolved if you're regularly updating your beneficiaries. And certainly if one of your beneficiaries dies, that is probably a particularly good reason to revisit your beneficiary designations and possibly even your living trust or your will. The form also allows on page 3 for contingent beneficiaries. So if the owner has died and the beneficiary or beneficiaries have died, if all of those people have died, then there's another level where there would be a contingent beneficiary. You do see that on insurance contracts and IRAs as well. Finally, page 5, signatures and date. And then this is turned into the financial institution and part of the record. You may want to keep photocopies of this for your own personal records. And it's up to you whether you want to share that with your heirs or not. There should generally be enough information there where a financial institution is able to contact the heirs of the account. I've never had a problem in my career, again, which has spanned 30 years and thousands of clients. So this whole process here is very simple, effective, free, and is pretty much good for everybody. So this was my first video here in a series that I'll be doing about estate planning and my role as an investment advisor and how I assist clients in estate planning and working together with their CPA, their lawyer who might be drafting up documents and making life easy on clients so that they can enjoy their retirement years and know that their financial nest egg is in good hands. So if you enjoyed this video, please forward it to somebody that might benefit, and please hit the subscribe button to my YouTube channel. Thank you very much.